Okay, so this is the chart of ZS or Zscaler, and I took the trade on 7/17. So 7/17 is this day. This trade is going in my favor, but on that day, in fact, let me switch to that day using the on-demand feature of Think or Swim, so we can get a clearer picture of what I was thinking on that day. So July 17th. All right, so this is that day when I took the trade. Now, notice that the stock is in an uptrend. So it's been just constantly bouncing off the middle channel, going up, up, up. Now, on this day, I have mentioned in the trade alert that NASDAQ is red. So let's quickly pull up NQ. So you saw that there was a huge bearish candle that appeared on NASDAQ. And if you look at RSI is dropping sharply, and DMI is also changing direction. And as you know, I've mentioned in the past that DMI crossovers are considered significant amongst market technicians because they signal change in direction. So a DMI crossover here in the past, November 2nd, beginning of that bull run. With DMI crossovers, they are more reliable if there is a massive uptrend or downtrend in place, and then you see a crossover. So if ADX, the blue line, is kind of low, that means the trend, there's a trend in place, but the trend is not extremely strong or exaggerated. So in this case, on December 27th, the ADX is really high. So the trend is very strong. And that's when you get DMI crossover, the chance of a pullback is higher. In this case, since it's a zoomed out chart, you are not seeing the size of this pullback, but this was a meaningful pullback that happened in December. Now, when ADX is low and you keep getting these DMI crossovers, they don't mean much, so you should disregard those. So the next DMI crossover happened in on May 14th here, and after that, the market just shot up again for months. So we are again seeing a DMI crossover. It's coinciding with a high ADX number. So the likelihood of a sizable pullback is great. And then we can also see a confirmation with RSI, which is trending low with lower highs and lower lows. Okay, and so now let's switch back to Zscaler. That was my main reason for taking this trade, paying attention to NASDAQ because of the concept of a rising tide lifts all boats and vice versa. So if NASDAQ drops, most of the tech stocks will get pulled back. Now, looking at ZS, the chart of ZS itself, so this red candle by itself is not that meaningful because we did see a red candle here, but it just went right back up. But NASDAQ's price movement, sharply dropping RSI, and DMI changing direction led me to take this trade. As long as NASDAQ continues to fall, ZS will also continue to fall. So now if you switch back to today, you will see that we did get some follow through on that trade. So, but again, any trade can go against you, and really it depends on what will happen on Tuesday after market close with Alphabet and Tesla earnings. That will decide if this trade goes in my favor. But when I take a trade, I'm just showing you what things I pay attention to, and with the knowledge that any trade can go against me. And that's why we have trade management rules in place to handle those situations. Earnings. Get ready for some crazy earnings next week. So we have a ton of stocks from our watch list reporting earnings, but the main earnings are on Tuesday after close, which is Tesla and Alphabet. So that's these earnings will majorly move the markets. I know Nasdaq has been dropping, and I'm hoping that we'll get a proper correction. But again, that's the environment we are dealing with. Some kind of event is scheduled every week which can change market direction. So if Tuesday Alphabet and Tesla report blowout earnings, Nasdaq can reverse instantly. So just be aware of that. Tuesday is going to be a big day, and then I already told you, as far as macroeconomic data is concerned, it will be Thursday and Friday. So my plan would be for next week: do not take any trades on Monday, preferably not even Tuesday. Save all the capital for Wednesday, Thursday, and Friday. I may nibble on maybe one or two spreads if I see clear market direction on Monday and Tuesday. If not, I'll just post trade ideas in our Discord group like I always do, and feel free to use that list for your own trading. Let's look at the macroeconomic calendar for this week. So it's a pretty silent week from Monday to Thursday. Thursday we have regular jobless claims that come out, and that always moves the market. In addition to the jobless claims, we have GDP Thursday, so get ready for some volatility in the morning. And then Friday is the main event of the week, which is PCE. And as you know, more than CPI, more than PPI, PCE moves the markets because that is the Fed's preferred gauge of inflation. So as I've been laying out this plan for our group for months now, that because of all this macroeconomic data that keeps coming in every week, and this is major data. So CPI, PPI, PCE, these can change market direction in the blink of an eye. So the only way to deal with this kind of data coming out is split your trading allocation into two. So maybe take two trades at the beginning of the week. So let's say you take 4 trades every week. Take 2 of them towards the beginning, Monday or Tuesday, and then save your allocation for Friday. Because by Friday, all this macroeconomic data would have come out. And if your directional bet was correct on Monday and Tuesday, then you can double up on that on Friday. If it was wrong, you can hedge it by taking opposite trades, opposite directional trades. So that's what I'll be doing next week. So I'll be saving my capital for mostly for Friday, and I may nibble on some trade between Monday to Wednesday. Okay, I'm not giving any commentary on RRG charts, which is relative rotation graphs, this week. But since our members don't have access to it, I'll just put a screenshot of that. Interpret it the way you like. It's showing that most everything is heading into the red, which could point to an upcoming correction. Only thing is XLK, which is technology, is still green. And this is going back to July 15th. So it doesn't reflect the price movement this week. So my guess is if you look at the updated charts, the charts update on stockcharts.com on Monday. So if you look at the updated charts on Monday, I bet XLK has also dropped into the weakening quadrant. So basically at this time, everything is heading into the red, which could coincide with the correction. The only wild card is earnings. So if Tesla and Google report really good earnings, and there are a ton of other companies reporting earnings next week, then this picture could change. So that's why I'm not going too much into RRG charts, because RRG charts is a slow moving animal, and with the fast paced environment we are in, with all this macroeconomic data and earnings coming up, I wouldn't pay too much attention to these charts. Okay, let's look at some charts, and I'll start with Dow Jones. So this is DIA, which mimics Dow Jones, but look at this point on 710. So Dow Jones was trapped in a sideways price movement, as shown here, where Bollinger Bands are trapped inside Keltner channels, which is also called a TTM squeeze. And when TTM squeezes happen, they eventually break out with an explosive movement. In this case, That breakout happened here on 7/11, and if you remember, we saw like a massive, almost 800 point move after UNH earnings. So this is the breakout. This is the classic TTM squeeze breakout that happened on Dow Jones. And the reason I'm at the bottom, I have TTM squeeze indicator for you, is to show you when to get out, when a breakout is done playing out. So if you are a breakout trader, so let's say you are a directional trader, at this point you saw a squeeze happening, and just a quick reminder how to read the squeezes. So as when you see the red dots in the TTM squeeze indicator, expect little to no price movement, which is what you have seen here. The Dow Jones is just going sideways with no price movement. And then once the red dots start turning into green dots, that's when an explosive move is beginning to happen. And the direction of the bars is where you need to trade. So in this case, let's say you are a call buyer. You just buy naked calls at this point. And then when do you know that the breakout is over? When do you know it's time to register your profits? So if you use the TTM squeeze indicator, once you start seeing a dark blue bar appear after a series of rising light blue bars, once you see the first dark blue bar, that is when it's time to get out and time to register your profits. So in our case, since I'm not a breakout trader, I did take a trade on DIA, in fact, on Friday. That was based on RSI first going into overbought and then dropping below 70. And of course, on Friday, I did see that dark blue bar, which kind of confirms that this breakout is done. Now, what is the downside price target? Because Dow Jones could keep going higher from here. We are just wanting to know at what point Dow Jones could reverse. So with breakouts, usually the stop loss or downside price target is slightly above the breakout point. So I would imagine around 400 is where we could see a bounce. So watch out for that if you took a bear put spread on Dow Jones. And if Dow Jones starts reversing around 400 next week, then you might want to manage any bearish trades on Dow stocks. Quick look at QQQ. Now QQQ is not in a squeeze, was never in a squeeze, at least for a long time. So QQQ has just been on fire. It's been going up because we all know, Nvidia and the AI bubble. So QQQ has just been, and when stocks are in a really fierce bull trend or bear trend, what you will see is that price action keeps bouncing off of the middle Keltner channel. So you see a bounce here, in this case bounce here, in this particular case didn't even went down to the middle channel, it actually bounced off the top, and then it's been bouncing off ever since. Now this is the first point on 7/17 where that bounce failed to materialize, and QQQ is, or Nasdaq is, officially under pressure. So this is a series of nasty candles, and of course we are at the bottom of the Bollinger Bands, and if you're a swing trader, you know that stocks are most likely to bounce at the top or bottom of the Bollinger Bands. And in this particular case, we are primed for a bounce, but only if Tesla and Google report good earnings. So if Tesla and Google report good earnings, we could see a massive bounce on Tuesday after market close. So just watch out for that. Another thing I want to point out is every now and then I bring up moving averages. So I use 10, 20, 30 day EMAs, exponential moving averages. And moving average crossovers, they don't happen as often, but when they do happen, it signifies a massive trend change. And in this particular chart, I think it's a 9-month, it's a 6-month chart. Let me pull up a 9-month chart. So this is a 9-month chart of QQQ. You will see that the moving average crossover has happened here, This is actually November 6th, and that was the beginning of the bull run. So it just went on all the way till April. So December, January, February, March, April, 5 months. Then we saw a moving average crossover where the blue line is crossing over the yellow and red line, yellow and pink line. And then that's when we got like a sizable pullback. This wasn't really a correction. I was hoping for a correction, but we didn't get it. It was a sizable pullback though. We got that, and then again another moving average crossover happens here on May 6th, and markets again went ballistic. Now we are again approaching that moment in time that if Tesla and Google disappoint on Tuesday, the moving averages are lined up for a reversal. So this could be the beginning of either a sizable pullback or it could be a correction. We don't know yet. But keep an eye on moving averages, and Tesla and Google are the deciding factors if we will get a crossover. I'm not looking at SPY. This is the chart of SPY because SPY is like I've mentioned before. Is the well-behaved cousin of QQQ because SPY is also full of a lot of tech stocks. So it does follow QQQ, but you will see more pronounced price movements in Nasdaq than SPY. So SPY will show you the same setup as QQQ, but slightly buffered down version of QQQ. So same setup, but I don't want to go into it because I've already covered most of the price movement with QQQ. And finally, I don't know if you guys have noticed, look at VIX. VIX, which has been crushed since the beginning of May, has suddenly spiked and is at 16.83 today, which is amazing. I never thought it would happen. I mean, last time I checked, it was 12. And if you have seen my previous market outlooks, in my books, a breach of 16 is that line in the sand. If VIX breaches 16, that is the point where a likely correction can happen. So things are kind of lined up for a big sizable pullback in the stock market. Now, since we are in the middle of earnings season, it really depends on earnings. But this is one indication that a sizable pullback could be right around the corner. So that's all I have for this week, and I'll see you guys next week. Remember, I'll not be taking trades most likely on Monday and Tuesday. So my first round of trades will come on Wednesday. Then most of my trades will again be concentrated for Friday.